Hello, I'm Alex Davies, founder of Wealth Club. With me today is Bill Nixon, managing partner of Maven Capital Partners. Hello, Bill.
Hello, Alex. Good morning.
So first off, Bill, could you just give me a quick overview of who Maven are?
Of course, Alex. Maven Capital Partners is a private equity fund management business established in 2009 following a buyout from Aberdeen Asset Management plc. We have a significant specialism in VCTs. We operate from 10 offices around the country. We have more than 60 people, and we are strong believers in the merits of our regional investment model.
So why is Maven so well placed to manage VCTs?
I think it really comes down to our regional investment model. Unlike a number of our competitors who are quite London-centric and do a very good job, we believe in the strength of a regional model where we have local executives on the ground looking at local transactions and seeing some of the best opportunities in the territories. And I think that's a key differentiator for our VCT business.
Okay, so the type of investments you're looking at, what's the ideal company for you?
Very sector agnostic. We will look at almost anything so long as it's in a growth sector, will often be sector disruptive. But the key aspect with any investment opportunity is the quality of the management team. We have to see a skilled team, ideally who've done it before. We don't like people learning in our money, which is a common mantra within our business. We like to see a very well balanced team.
And how do you find these deals typically?
Well, deals come to us from a number of sources, but most commonly from the regional UK corporate advisory community. So they will come to us with the opportunity, and we'll look at that, we'll evaluate the team. We may be in a competitive position, we'll do some sector research, and we'll decide if we want to proceed. And
last year there was, I think, £542 million raised in VCTs. This year people are saying there could be up to about £1 billion. Are you finding it harder to get deals? Are there a lot of money chasing the same type of deals, and is it going to push prices up?
It's a fair point, and I think there is some evidence in certain areas of pricing pressure. Again, I'd go back to our regional model, and I think that because we have such a strong presence in some of the regions and very embedded relationships with the local advisory community, we do tend to see a larger volume of transactions.
Okay, and of course, prior to 2015, lots of, you're very well known for doing MBOs, etc. How's that changed now? All the new rules, how are you coping with them?
It was an unwelcome change to the VCT industry that we were no longer able to do buyouts, but a number of us had been investing in growth deals for many years. So it did require a bit of fine-tuning of the team. We hired some extra people with experience of early stage. But again, I go back to the strength in the regions. Although we can no longer do buyouts, we still see a very large number of growth transactions that fit the objectives of VCT investors.
Okay, so in terms of investments you've made recently, any particulars that stand out?
Well, two that I'd probably mention in particular. Contigo Fraud Solutions is a transaction we led with another VCT manager. That has a software platform that deals with anti-money laundering compliance checks. Clearly, very hot sector at the moment. And secondly, in Chester, we invested in a business, in a broadband fibre business called ITS. And ITS has built and developed its own fibre networks, taking broadband into some rural communities, as well as working with a number of councils.
Okay, so what attracted to you about that particular investment?
Quality of the team. The managing director there was formerly with BT Openreach. He had worked for a large corporate. He was coming into a small business to try and grow it. And make some money for himself and for his investors. So, that appealed to us. Both the sector is very appealing. There are a number of very highly valued quoted companies in that sector, so there's the opportunity for some arbitrage on the investment, allied to a very high quality management team.
And in terms of investments, historically, what are you particularly proud of?
Well, we've had 3 or 4 very high value exits in the last few years, which has allowed us to pay some good dividends to shareholders. The most recent high value exit was a business called Nemplas. We bought a business called Homelux Nemplas in 2006 from US Trade, very much an unloved business. We then helped the management team grow by acquisition and organically. We undertook a demerger of the two businesses, sold one for 15 million, and then the second business some years later for 28 million. So we turned 6 million purchase price into 28 million of what we call enterprise value in a 10-year period. And the second exit, Nemplas, that we sold to a German trade buyer quite recently, delivered a 5 times money return over the holding period. Two other very high value exits, Westway Cooling, a business in London, and also Cash Basis in the south coast of England, which manufactured cash drawers. Both we sold to US trade buyers who will pay good prices for attractive, well-managed UK businesses.
And anything that hasn't worked out quite so well for you?
I think inevitably in any VCT portfolio where you're investing in smaller, younger risk businesses, you get failures, you get disappointments. There's often a market correction that takes you by surprise. Invariably, management don't quite perform to the level that you expect. The biggest challenge we've had in the last few years is the oil and gas service sector, where we have a few investments. But I'm pleased to say that that sector is now coming back. And a number of companies that we are invested in are providing essential services to the energy services sector.
Okay, and have you lost any companies as a result of that?
No, we haven't lost any. We've had to significantly cut overhead. Some of the businesses temporarily went down to 3-day week. It's been quite painful in that sector, but hopefully the worst is behind them.
So you mentioned investing in young, fast-growing companies and the risks. Clearly, since the rule changes in 2015, the companies you have to invest in are younger and riskier. What are you doing to sort of mitigate those risks for investors?
I think it's all about due diligence. You have to be more selective for younger companies. You'd be surprised the quality of management that you can get. You can often get very young, energetic teams. If we can be satisfied that the sector is a good one, and we can perhaps supplement the team with some grey hair, with an experienced chairman, that often is a good combination.
And finally, Bill, if I'm going to invest in a VCT this year, why should I invest with you?
Well, both trusts which are making the offers this year are long-established VCTs. They have 7 or 8 years of sustained growth in net asset value total return. They have a very healthy track record of dividends, and they have very strong portfolios. Allied to that, we have a business across the UK which sees some of the best deal flow in the industry, and I believe we can continue to build these companies very successfully.
Okay, thanks very much, Bill.
Thank you.
Bill Nixon of Maven Capital Partners.
Thank you, Alex.